Good morning and welcome to this weekly market update from MRC Markets. There's the 28th of March 2013. What we'll do today is go through some technical analysis on Euro Dollar, Cable, Dollar Yen, Dollar CAD, Aussie Dollar, Pound Yen and Silver. We normally do gold, but I thought I'd do silver today because we haven't been through silver in a while, and it's got some interesting setups on there. For any new followers, we have 3 moving averages on each of these charts. We've got a 50 simple moving average here, which is the red one, 100 simple moving average, which is the blue, and 200 simple moving average, which is the gold one there. We will not be making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website at www.mrcmarkets.com. Okay, let's have a look at the Euro Dollar charts. This is the daily chart. What's been going on this week? It's basically just been sliding really, especially, well, what day is it today? Thursday. Monday, Tuesday, Wednesday, we've had some very bearish action here. You can see the last 3 daily candles here have been very bearish indeed. We've shed off about, how many pips? One spot 30, 20. So we're sort of about 230 pips down the last 3 days. You had some real bearish action here. All the stuff coming out on Cyprus. I won't go on about the fundamentals, but we know what the fundamentals are all about at the minute. It's all heavily weighed on Cyprus. A lot of uncertainty out there in the markets, especially the euro currency. And the euro does bring, as it's such a big currency pair, it does bring a lot of the other pairs down, especially the US dollar. It really has a big effect on the US dollar because the USD is made of a basket of currencies and Euro dollar is the main one. So always have to be careful there. That's why I heavily advise looking at Euro dollar, even if you don't trade it. Just look at it, keep an eye on it, because it does move the other pairs. Anyway, what am I looking at on these charts? Basically, the main thing I'm looking at is this fib here from the lows to the highs. We initially got some buyers coming in at a 50% retrace at one spot 28.75. They were pretty weak. We got a little bounce up. We got stalled at the 200-day moving average, and we've come back below. So now the next sort of target is this 61.8% retracement level, which stands at the one spot 26.79. And as you can see, if you look to the left of your chart here, I'll just draw a little circle over and I'll change the colour of it as well. So you can look to the left of the chart here, you can see this is a previous buy-in zone. So if we come down to this level, I would not be surprised to see some buyers coming into this market, and it'll be really interesting to see what the action is. A lot of people that have been selling all the way from the highs at one spot 37, I would not be surprised to see them change their bias if we get some sort of reaction at this level. So if we get a daily reversal, I would not be surprised to see a lot of people trading off that 61.8 and perhaps stops below the 78.6 for the long-term swing players. Also, you can see in terms of the moving averages, although I'm not really focused on the crosses on these moving averages. It's more sort of used as a sort of confluence. So if there's any sort of buyers at a fib level, if you've got a moving average underneath that fib level as well, it does act as good confluence, in my opinion. But in terms of the cross, I mean, you can see the last cross up there. We had the 50-day moving average crossed up the 100-day moving average. I think it's called a death cross. You can see that worked very well, and likewise now you've got the cross down. It's already started coming down a bit, so a lot of people will be selling, I would have thought, at this this moving average crossover, as I think it's a big selling signal. But yes, I mean, in terms of the euro dollar, the bigger picture is all about this fib, in my opinion. I mean, if you flick it to the weekly, if you zoom in a bit, you can see the 50-day moving average is, funny enough, right on this 50% level. And you can see last week's candle was a nice reversal candle. So you would have thought the odds were that you get the euro popping up this week. It still well could. I mean, there's nothing stopping it coming back up these next couple of days, making it close above that 50% and causing a big lower wick on this candle. But it is looking quite likely. This euro has just been so weak this week, but you never know what can happen in these markets. In terms of a shorter term time frame, the only other thing I'm interested on is this fib here from the highs to those highs there at around the one spot 30.46 to the lows at one spot 27.51. That's the fib play that I'm personally looking at on this 1 hour chart. So I was getting confused there because we've got two 50%. So I'll delete that big one now and we'll focus on the shorter time frames, the 1 hour or the 4 hour. Flick it to the 1 hour now. So yeah, I'll be interested to see what happens at the 50% level here. You can also see we've got this 200-hour moving average coming in at around this level as well. So if the market comes up to that, then we could have a nice confluence level at that 50%. A lot of sellers will probably have orders in at that level with stops just above this 61.8. And yeah, and also on the 4 hour, you've got the 50 simple moving average as well. So you've got a confluence over the 4 hour and the 1 hour. Two moving averages bang on that 50% there. So it'll be interesting to see if we do bounce up and see what happens at that level. But yeah, that's pretty much what I'm focused on the euro dollar. Let's have a look at the cable chart. The cable daily chart. The first thing I look at is this fib all the way from highs to lows here. It looks like it's been, I think we said it in last week's video, as soon as we got a nice reversal, we started popping up, the odds would say, it looks like, in my opinion, that it wants to come up and test this 50% level at 1 spot 56. Of course, it could come up and test this 50-day moving average and reverse and keep on tanking, or it can just not even go up there at all. And the seller's already coming in. There's nothing stopping it selling off. But I wouldn't be surprised to see it come up and test that 50% level. The market does normally get quite attracted at that level. Other thing I'm focused on is let's flip to this 4 hour chart and some fib plays that have been going on this week and last week as well. It's this fib here. If you look at the low, from the lows to highs here, was it that one I was looking at? Was it that one? Yeah, fib from lows to highs here. It didn't quite come down and test the 50%. I thought it did. I don't know why I brought this chart up. But you can see when we had a nice little uptrend. It's retraced. We've put. I know that's why it was the 38.2. I think. I just want to double check that. Yeah, there he is. It was the 38.2. I remember. I swear it was a decent fib level. So yeah, we came up here. We come back down. Test this 38.2% retracement, and also this 100 simple moving average on a 4 hour chart, and we got a nice pop up there. And then what you can do is what a lot of fib players do, you then move the low up from that that previous swing low where the buyers came in, and you draw it up to the highs, and you've got another fib level here. I'll delete the 38.2 for now, as it's not one that I prefer, to be honest with you. And yeah, we then had buyers coming in at this 50% level to the pip. You can see that there, but we didn't get a massive pop up. So, I mean, if you put if you take a half off when let's say you put your stop below the 61.8, and let's say it's 30 pips. As soon as it gets 30 pips up, a popular sort of strategy is to bank half your trade and then your stop's paid for. So your stop may have got paid for there. But you can then see it's come back down here and it's looking a bit weak. You can see this 200 simple moving average on this 4 hour chart is sort of capping it. So the fib that I'm personally now looking at is from the lows to the highs there, and what would happen if we came back down to this new 50% level. You can see if you look to your left, this was that previous spike, which I think was a news spike. It might have been last week when we had the budget out. We had a lot of buyers coming in at that level, so it would be an interesting sort of confluence level. Also, it's looking like a head and shoulders as well. So there's a left shoulder there, that could be the head, and then this could be the right shoulder. It doesn't always break. A lot of times it then bounces up. So that's one thing that I'm focused on this week, to be honest, in terms of setups that you could perhaps look at. Not that we give any trade calls or recommendations on there. It is up to you to find your own setups, but that's what I'm personally looking at this week. Let's have a look at the dollar yen. The only thing I'm really focused on dollar yen, we've been speaking for the last few weeks now in terms of buying the dips, because it's in such a strong uptrend on this daily chart. The first thing I'm looking at is this 50-day moving average. You can see it's been holding really nicely here. That previous dip there, and then you've got the current price that's tested it, come back up, and this 50-day moving average is holding. It is looking a little bit heavy though. In terms of the last couple of days have been a little bit bearish, but at the end of the day the setup is still in play. And let's zoom in there, because what I'm going to do now is I'm going to look at the fib I'm personally looking at. If you draw your fibs from the lows to the highs there, surprise surprise, right after the 50% level where buyers come in, test that level, you put a pending order in, then you'd be doing quite nicely. Stops below the 618. For example, you can see it's a nice sort of confidence zone. So you've got the 50% level and the 50-day moving average. Nice confidence level. I wouldn't be surprised to see it rotate up and test that 0.0% level, in my opinion. But you can see on this daily chart, it's been such a strong uptrend. Be a very brave person to be selling this pair, in my opinion. Although you could say that it's been due a retrace, but then again, you could have said it was due a retrace back down here. So the trend is your friend until the bend in the end is the famous quote. But yeah, that's all I'm focused on the dollar yen. I think it's an interesting setup, that one personally. The dollar CAD, it's been liking the fibs, to be honest. If you just look at this daily chart, if you draw an original one there from lows to the highs there, bam, 50% rotated higher. And then the next sort of swing, you could have drawn the new high there from that recent swing dip low there, bam, off the 50%. Also 100-day moving average confluence and 200-day moving average confluence there. We rotated higher, we broke all those highs. So now the next one really will be from that sort of swing there, or this mini one here. This will probably be the bigger one. It's coming near the 50-day move, the 50% level here. We're also testing this 50-day moving average on the dollar CAD. So be interesting to see how it reacts. If we get a nice reversal candle, I wouldn't be surprised to see it rotate higher to that 0.0% level. But it is looking quite heavy. The last 1, 2, 3, 4, 5, 6, 7 daily candles have all been red candles. There have been massive red candles, perhaps that one there. So some say it would be that's just a retrace and it's looking to then bounce and then go back higher, but it is still looking a little bit bearish, especially last 7 days. So that's what I'm personally focused on this dollar CAD. Yeah, that's pretty much it on the dollar CAD, to be honest with you. The Aussie dollar is an interesting chart. And immediately on the daily, a lot of sellers will be in this fib here from the highs to the lows. That's why we look at the 78.6. I don't look at it too often, but I noticed it on this Aussie dollar chart. That's why I put it on here. Yeah, so the longer term sellers have come in at this 78.6 level, which is the bigger fib. Let's say if you want to look at the 4-hour chart, the 4-hour chart's been really interesting. I think we may have spoken about this in the last video. I can't quite remember, but it's been really liking this little uptrend that's going on this 4-hour chart. Has been really respecting the fib level. So the first one there from lows to highs came back down 50%, rotated higher. Then we had this. Well, let's move it to the next one. So that's the next dip. It didn't come down to the 50%, but I'm pretty sure it would have come down to the 38.2. Bam, then came back down to the 38.2, rotated high, and then you could have extended your fib and then drawn the new low from where it bounced off in the previous one. Let's delete the 38.2 now so it looks a bit clearer. Zoom as well, actually. Then bam, you can see it came back down, tested the 50%, and we're also rotating higher. So then what you can do is you can then move your low to where we bounced off of on that previous fib and extend your high. You can now see, surprise surprise, we're testing the 50% level, and also you can see we're testing the 50 simple moving average. So I mean that's how easy it is to trade. Not easy, but you can see how well the market respects these Fibonacci retracement levels. That's why I post them on Twitter, and that's why I look at them myself. It's a one way to look at the market, in my opinion. I think, well, clearly it's evidently that Forex does respect these fib levels. Some say that the bank's coming out of these levels, but anyway, you can see that's the current setup that I'm looking at. A nice 50% retracement and a 50-day simple moving average. Yes, that's the 4-hour chart. Similar sort of thing. Well, similar thing on the 1 hour. You can zoom out there and you can see that fib a little bit clearer. Also, we've got the 200 bar moving average there as well. 200 hour moving average there. So you can see how well these moving average, you can get a nice moving average and 50% retrace confluence on your charts there if you look out for it. The last Forex chart we'll look at is this pound yen chart. We'll look at the one thing I focused on this week. I think I posted it on the Twitter feed as well. Is this fib here? You can see right off this 100-day moving average, the obvious swing low. You draw it to that swing high then, and surprise, surprise, we're bouncing off the 50% retracement, pretty much to the pip there. I'll flick it to the 4 hour so you can see it a bit clearer, and I'll zoom out. You can see there. I'll just draw an arrow just in case you can't see. Literally to the pip there. So you can see a lot of people have got orders at this level because otherwise it wouldn't react to the pip. Literally a huge spike there. As soon as it's touched that level, price has gone straight back up. Wouldn't be surprised if people had stops below 61.8, and you can see the market, it is struggling to get up. It's the obvious fib. I mean, if you flick it to this 4 hour chart, it's the obvious setup that is in play. If you want to flick it to a shorter term time frame, sellers are kind of in control at the market, and I think they're getting in at 78.6 as well. You can see that there. So that's the first swing there, highs to lows, bam, off to 78.6. And then if you draw, I think this one here, highs to lows, bam, 78.6 as well. You can see right there, sellers came in. And then if we draw a fib from the new low there, it's that swing high there, bam, coming at 61.8. So you can see how well the fibs have been respecting this market. The pound yen, we've also got the downtrend resistance there as well. So technically it's in a sort of downward, on the 1 hour chart it's in a downtrend. In the 4 hour chart, I personally think it's in an uptrend. So it's a sort of battle between the two really, but I'd always personally say that the bigger fib is the stronger fib, in my opinion. So yeah, that's how I've got my pound yen chart. So I think I posted this on Twitter. I'll post it again so you can see it's the key battle, the uptrend of 50% and that downtrend resistance. That's the Forex done. Let's have a look at this silver chart. Silver chart, first thing I personally that just comes to the eye naturally. You've got a sort of downtrend resistance that's in play there. You could also draw maybe a trend line there from the lows as well. So we're kind of in a downtrend channel. But if you draw a fib from the low of this daily chart to the high, surprise, surprise, we are getting buyers coming in at this 50% level. So you've got 1 hour there I'll put in. And another arrow there. You can see they're coming in at this 28.09 handle. It's been really choppy. I mean, I suppose you could draw a level in as well. I'll just make this level a bit thicker so you can see it a bit clearer. This support level here has really been holding very well. This sort of 28.55. I think I might have posted this on Twitter actually. If we zoom in a bit, in fact, I'm just going to clear this chart up now so you can see my daily chart perspective. If I've zoomed out the daily chart, we're now in the 4 hour chart. Yeah, I remember posting this on Twitter now. You can see from the low there, I've just drawn a fib from the low at the 27.93 to the high 29.35. You can see this 50% level had multiple spikes. So the amount of times it came back down, tested it, and bang, kept on spiking and piercing up. I mean, there's at least 10, 15 spikes there. And then we eventually broke down, and then you can see people coming in at the 78.6 level. We sliced through the 61.8. But buyers coming in at the 78.6. You can see how well these fibs are working, and that is what has been going on in the silver chart. And you can see we're now above this the 50% level, and it's come back down already and tested that 50% level. So key levels there that are playing out on these charts, especially the silver chart. It's really interesting. That 28.64 is the 50% retracement. key level there on the silver chart. Okay, that's all for today. I hope you enjoyed this video. I hope you found it useful. Have a great week trading. If there's any other videos that you want me to look at next week, then feel free to post either on Twitter or under this video that I'll post up on YouTube. Have a great week, rest of the week trading, and I'll catch you next week. Thanks for listening.